Okay, so we're gonna get started. Hey, hey, I'm glad to see y'all already in here. Put this thing in my ear so I can hear y'all. And we're gonna take off. Thank you so much for joining us. I am going to do a couple of things as we're getting started. So everybody got your manual. So this one's got all kind of paper sticking out of it. So let me get this one. Okay. Okay, if you got your manual, we're gonna go ahead and get started. I want to show some share some stuff with you. And let's see. While that's circling, let me go ahead and invite some folks to come in through the live stream. All right. Y'all let me know when y'all can see that. So I can tell you right now, we're going to be going over some things that are in the homeownership pre-planning and much, much more workbook. We're going to do some things that are on page 90. Let's get these page numbers right so you guys can follow along in your manuals. And I want to say this is great. I've gotten all kind of texts and emails and correspondence from you guys just letting me know that you got your manual, the homeownership pre-planning, and much, much more manual and workbook. So why am I doing this? That's the question. Well, I'm doing this because I have been um, a realtor for decades. And over the years, I've seen those who own businesses or who are in ministry, and they're not quite sure how to galvanize all of their qualifying attributes so that they're able to be approved by underwriters. They need to see validity in the person's financial standings. So the purpose of this book is to show those, even people who are not in business, who are not in ministry, but you're just not sure how to reflect yourself as a viable borrower that lenders will be willing to underwrite. Here it is in this book. So it's more about post closing, post purchase, and how you can pay off that mortgage sooner, not just with applying additional payments towards the principal, but with prepaying the interest. It explains how interest on mortgages is paid in the arrears, and how when you prepay the interest, then what happens is you reduce the amount of interest that's being taken away from the principal, so to speak. So when you make your monthly payment, a large portion of that payment in the beginning is applied towards interest. But if you prepay the interest because it's charged in the arrears, you get ahead of that interest charge, and more of those funds can be applied towards the principal. So even if you're prepaying some of the interest, and then sometimes you are applying more towards your principal, what you're doing is you're eating away at that principal balance a lot swifter than if you were just applying more payments towards the principal. This book explains to you how to do that, the why in doing that. That's post purchase. Pre-purchase planning has to do with you understanding compound interest, understanding what types of loans are relevant, which types of loans could be predatory. Even if you're refinancing, which would be post-purchase, you want to refinance. Not all HELOCs and equity lines of credit or equity loans or refinances are equivalent. There are some loans that are better for you than others. Some are almost predatory, and you won't be able to see it because you're just seeing that the interest rate is lower than what you already have. So you think it's a better loan. Well, in this book, it shows you in detail how you can use a formula to determine whether or not it's going to be beneficial. So people say, well, listen, why do I need that? Why do I need to know how to do it? I can just say, hey, Google. I can just use AI to get it done. That's true. But in some cases, there are variances, and you won't know how to apply those variances because you'll not know the formulas and the steps. This gives you the basic formulas so that you can use your financial calculator to be able to determine how to make things work custom for you because everybody's situation is different. This will give you a way to utilize, and no matter how you change the equation or the situation or the factors that are involved, this book shows you how to apply what you need to apply. It gives you details on how to apply what you need to apply to determine what's going to work for you in terms of longevity, because you're planning for your children and your grandchildren. But sometimes you can't see way down the road and around the corner. You understand the present value, or you know how to determine the present value. Well, this tells you how to even determine the present value, because just because you've got $10 doesn't mean that the present value of that $10 is $10. So when you go to project the future value of that money, you're doing it maybe based on $10, but it's not even worth $10. Now, this tells you how to determine what the present value is and how to determine the future value depending on how far you want to project. There are all kinds of things in here that will fascinate you and that will assist you. So right now we're going to look at, firstly, how a business owner can go about qualifying to purchase property. Okay. How a business owner can go about qualifying to purchase property. So, firstly, you want to determine whether or not you want to qualify as a business owner, or if you want to qualify as an employee. So if you want to qualify as a business owner, then what's going to happen is that your corporation is going to have to do the qualifying. And firstly, let's assume that you have formed a corporation. There are some business owners, they're operating as a partnership, they're operating as a sole proprietorship. And I want to tell you, stop right now. Stop right now and consider forming a corporation. In this book, it gives you the documentation that will help you form the corporation. But in the class, we teach you how to complete the documentation for forming a C corporation or either a LLC. If you form a C corporation, there is double taxation because the corporate taxes have to be filed. And if you are an employee of the corporation, then you file taxes. The benefit of that is that all of your information is set up as if you're an employee. You determine how much your corporation is going to pay you in terms of salary. And then when you get ready to qualify, you're submitting 2 years worth of income with you as an employee of that corporation. You're submitting your paycheck stubs as an employee of that corporation. You understand what I'm saying? You're submitting your personal bank statements as an employee of the corporation that you have a vested interest in, if that makes sense. So they're seeing you as employed by this corporation. They're seeing your viable paycheck stubs, which you're paying withholdings for. Everything is viable. Everything is set up the way that it needs to be set up and adhered to and followed in the way that it needs to be. Okay. So what that does for you is that establishes you with verifiable income, consistent, verifiable, substantial income as an employee of the corporation. If you want to do it whereby your corporation is purchasing the property, that works too, because you're going to have sufficient AR. Now, I'm assuming you know what AR is, but if you don't, let's talk about it. Your AR is your accounts receivables. And you'll have a standard software that you can use, or you could just create your own document in Word under your Excel, or in Google Docs under Sheets. And you can set it up so that you have AR showing your accounts receivable, showing all of your orders that are coming in, the amount of money that you're being paid for that, the date that you completed that particular order, the date that work came in. It'll be a whole report of AR, accounts receivables. Okay, you want that. And then also in this book, if you look at page 103 in this book, it gives you details on how to complete your financial statements. Okay, it's actually from page 103 to page 161. There's a complete explanation of how to prepare your financial statements. Okay, if you go to page 99 in the book, It has step-by-step instructions on how to form your LLC, how to form your C corporation. All that's in the book. Yeah, it's in there. So that you understand the documentation that's necessary to get it done. Now, in this book, we use this as a workbook. This is a workbook for this course. So everything that I talk about in the course is not going to be in here, but all the formulas and the documentation and the supporting docs are in this book, supporting what we teach in the class. But as far as the financial statement, if you go from page 103 all the way up to page 161, it is detailed information on how to complete your financial statement. Page 103 to page 161, it breaks down that financial statement. So why is a financial statement important? Well, we just talked about if you want to buy property as a corporation, if you want to buy property as a corporation, then you're going to have to prove the financial standings of your company. The very first thing they want to see is your financial statement. So this gives you step-by-step instructions on how to complete the financial statement as a corporation, okay? It talks about, if you look at page 105, it goes through calculating the total current assets. Okay. Firstly, it breaks down all the components of the financial statement so you understand all the components that are involved. Then it gives the definition of current assets, how to utilize the formula to calculate your current assets. It gives an explanation of the cash and the accounts receivables and the inventory. All of that. And then it talks about the importance of your total current assets and how you need to calculate it properly. And it even has the formula for the calculations in here. Let me tell you something. It's got everything in here that breaks down that financial statement. It really should have been said the financial components of a financial statement, because it is in detail. It talks about understanding accumulated depreciation. Understanding the definition of the components of non-current asset and the difference between the two, current assets and non-current assets. All of these are functioning parts of the financial statement, but it breaks down every part from page 103 all the way to page 161. Let me tell you something. When you get through with this, you'll understand all the ins and outs of how to prepare a financial statement for your corporation, because now we're talking about not you as an employee applying, but you as your corporation. Okay. Now the corporation is a separate entity from you. Okay. So your corporation is going to go to these non-qualifying lenders that we're about to get to next, and you're going to apply for financing to purchase real estate. Now, with the non-qualifying mortgages, they're not going to be looking for business credit. They're going to be looking at your financial statement, because they want to see the stability, the long-term stability of your company. So they'll look at your financial statement. They're going to look at your AR, that's your accounts receivables. That's going to be very important to them. And now these non-qualifying lenders, these are not hard money lenders, and I'm not opposed to hard money lenders. I've used them. They work out very well for me. I've used them, and I'm not used the ones that are predatory. So the interest rates were not exorbitant for me, and it wasn't overwhelming for me. So I was able to work that out without it being a problem at all. So I don't see it as being problematic, because I I was able to secure those loans, and I was able to have an excellent exit strategy. Okay, so I want to make sure that you understand that that's the biggest part. And y'all, I really apologize to those who are waiting for me to come on Facebook. I got so involved in talking to the folks that are with me, I completely forgot to bring on the folks who are waiting to my to get into the class on Facebook. So my apologies. And here we go. Okay, I hope you guys are aboard. I'm going to go ahead and and continue with the class. My again, my apology to those who may be coming in on Facebook. I just want to apologize to you. We've been going in the class for a while. I wanted to bring you all in on Facebook and YouTube right away, but I got so excited and got so consumed in what we were offering here in the course with the people who are here with me in the Zoom that I missed sharing it right away. So we've gone through quite a bit of information, and I apologize. I'm going to share the recording on YouTube and Facebook because there's a lot that we've already gone over. Okay, so some of the things that we did talk about. If you own a corporation, okay, if you own a business, let's say if you own a business, I'm going to take it all the way back there, okay? If you own a business, hopefully you have incorporated that business. If you have not, this book tells you details on how you can incorporate the business. Now, remember, this book, as we mentioned before, I got all these papers hanging out. I use this one for my class. This book, this one's pretty. This book, Homeownership, Pre-Planning, and much, much more. It's like purchasing power for business owners. So it talks to you about if you want to purchase big ticket items like real estate in your business or in your ministry, then you want to be incorporated. Here's why you want to incorporate, but we walk you through it. So everything you see in this book, this is a workbook. So everything you see here is supporting documentation for what we talk about in the course, in the live course. This book supports it. So what we have gone over so far is book pages 95 and 90 through 97, which talk about the documentation that's needed to form an LLC or to form a C corporation. We talk about the validity of the reasoning behind doing that. If you are a business owner and you've not incorporated, that means that you're a sole proprietor or partnership. The reason why you want to incorporate is so that you have a separate entity, so that when you go to apply to purchase real estate, if you want to do it under your corporation, it's a separate entity from you. It's an entity in and of itself. And so that brings us to what we were currently talking about. I just skipped over a whole lot of stuff that we talked about prior to bringing you guys on. And again, I apologize for it, but I got to keep up with the time. My apology. Okay, but now we're talking about the financial statement. Okay, and what we said was that if you are going to purchase the property as the corporation, as the business owner. Firstly, you want to incorporate. If you're not incorporated, you want to incorporate. And if you have any questions, any qualms, anything, any hesitation at all, we can walk you through that. We have a comprehensive corporate curriculum for a new business owner. So let's say you've been in business for years, but you just never incorporated. We can walk you through how to do that. That's a separate course. Now, that course has a cost to it, but it's an entire booklet that comes with that. We walk you through every course. Our class meets every Sunday, but we can meet at any time. We could actually record the course for you because see, we have a booklet that serves as a manual. This is also one of the books that we use in that class. And then I walk you through specifically the things that you need. Now, in this course, this is not a group course like you guys that are on Zoom now. It's not like that. It is an individual session that I have with each one of my enrollees. Everybody that's registered for that class, I meet with them individually because they have individual needs. And we walk through the whole book, everything from filing their documentation, understanding the differences in the different types of businesses, to setting up your business model, to scaling, to human resources, to software, to bookkeeping, to opening up accounts, to management services. That course is very extensive. Matter of fact, let me give you just an idea. And I'm only going over this because there are some business owners who have they've never incorporated, they've never considered that. And there are a lot of things that they want to do and they feel limited in being able to do them because they're not understanding how they go about getting it done. So I want to share it with you so you can see quickly. It's a easy corporate comprehensive curriculum for new businesses. Okay. And here it shows you how you can, there's the ISBN number. But anyway, I hope you're seeing all of this. Okay, so in it has a objective for the class, and that is so that when you finish this course, you will be able with your company to not just grow and expand, but you'll be able to purchase. You'll have the purchasing power that you need as a business owner to purchase the real estate that you want to purchase. And I want to tell you that most corporations, I don't care what it is, they own multitudes of real estate. Whatever corporation you can think of that's huge, that you guys may be employed by, they own a lot of real estate, because that is the one of the things that they can invest in, and they can see it viably increasing in its value. So the reason why I keep talking to business owners about purchasing real estate is not because I sell it, because you can buy real estate from whomever. I'm talking to people who live all over the world, to help them to understand that that is a good investment for their corporation. And it also substantiates their financial statement. See, when you go into the banks and to the lending institutions, they're going to look at your financial statements. Okay. They're going to look at your AR, as we just talked about a moment ago. They want to see your stability. And when you add real estate, it could be just a few parcels of land. It substantiates your net worth. Okay, so that's why. And there are a lot of ministries. They want to buy real estate. They want to buy their own land so they can do things with crops and cattle and water towers and build their own worship centers. They want to get in, and they don't know how to go about doing it. Well, the first step is to incorporate. You want to incorporate because that makes your business an entity in and of itself, separate from you. Now, I can't teach you all of this in this short period of time, but I just wanted to show you some of the components of the class that I teach, and it's called the Easy Corporate Comprehensive Curriculum for New Businesses. Okay. It's going to teach you the legal requirements for filing any type of corporate documents. We don't just teach it to you, we walk you through it so that when you finish that course, you're ready to take your documentation, or to send your documentation, or to upload your documentation to the Secretary of State's office in whatever state you are located in. Take it to the local authorities, and also to send it to the Secretary of State. We talk about the filing procedures. We talk about how to complete the documentation. In chapter 1, we talk about the operating day-to-day aspects of that your corporation, just making sure that you have all of this stuff in place so that when your record keeping, setting up the general ledger, so that when you go to apply, all of your information is set up, and it's not hard. It's very easy. So that tells you something about that course. Okay. All right. So back to what we're talking about today. I wanted to show it to you real quickly to let you know that we offer it. It's available. What qualifies me to do this? Well, I've been a successful business owner for several decades now. I've assisted hundreds, maybe thousands of people since I've been first licensed in 1991, not only to purchase property, but to start their own companies. I could ravel off the name of several corporations now that you could reach out to, and they would verify that, yes, we were the ones who helped them. We taught them. We helped them to get their documentation filed. We helped them to set up their general ledger, to set up their company, to get their clients. We did all of that for them. That is what we do. And so I'm very qualified to do it because I've been doing it for years, and I have a list of companies that would be more than happy to give a testimonial. And if you want to reach out to me to ask me for some of them, I'll give them to you so that you can reach out to them and they can verify to you, yes, we were the ones that helped them. So, and the reason why it's important to me is because I keep seeing it and I keep hearing it, and I'm seeing people in there fasting and they're praying to be able to purchase property, or to be able to do this or to do that for their ministry or for their business. And the answers are right here. Okay. The answers are right here. Okay. So we talked about the financial statements and how, if you're going to buy it in the name of your corporation, that you need to be able to prepare your financial statements. And of course, in the book from page 103 to page 161 in your workbook, it gives you step-by-step instructions. But not only that, in this course, we talk about step-by-step how we break down that financial statement, how you calculate the total current assets, how you firstly understand the definition of current assets, how to formulate and walk through the calculating of your current assets. We've got an explanation of you understanding your cash, your accounts receivables, your inventory, and lastly, the dire importance of the current assets. And then we go into helping everybody to understand the fundamental importance of non-current assets versus current assets, understanding accumulated depreciation. All of this is a part of your financial statement, and it walks you through how to calculate it. But you don't, this book is just the workbook. So if you don't have the class, and this course is free, this course that I'm teaching right now, it's free. Why am I doing it? Because I want you to know how to utilize your business that you've had for years, that you've been running, to purchase real estate. It's really important. You might not be able to understand why it's important right now, but in just a little while, and I'm not kidding you, matter of fact, probably before this year is out, you're going to understand the importance of owning some ground, because there's some people who are going to be pushing back on you owning the ground. So right now, while there's not as much pushback, I want business owners and ministries to understand, when you're a large ministry and you're incorporated and you got all your stuff together, it's nothing for you. But there are a lot of ministries that appear to be struggling. But if they just own some ground, it would change things for them. They're trying to do it with the minister being the chief cook and bottle washer. And I'm saying once you incorporate, which is very easy to do. And again, we teach that class. Then you can show your business as its own viable entity. Then we show you how to set your business up so that when you go to purchase something, you lay out your financial statement, you lay out your AR. They get a chance to see this entity from a different perspective. Then it's a matter of going to the right lender that's only going to require certain documentation. So some key points that you want to consider for required documentation. If you're going to apply as an employee of your corporation, then firstly, again, make sure your company is incorporated. If it's not, reach out to me, DM me, so that I can walk you through how to get that done. We offer a course that is a paid course, but you'll be glad that you did it, to teach you not only how to incorporate, but it's much more than that involved in the curriculum, so that when you walk into that place, you feel confident that you have everything. Your company has an excellent infrastructure. You've got an excellent model scaled based on your type of business. And when you walk in there, you know your stuff, because we're teaching you your stuff. So when when you need to do anything, you can refer not only to this book, but to the Easy Corporate Comprehensive Curriculum for New Businesses book as well. Both of those we have, and you'll be well equipped. You can pick it up as a quick reference when you need to look up something. It's got a formula in here for you. It's got a list of things that you need to do. It's got a list of the non-qualifying mortgage lenders in there as well for business owners and ministries as well. But the very first step is to incorporate. So if you're not incorporated, that's the very first thing you want to do. And it's easy to do. I can walk you through the whole thing. DM me and we will go through getting that done for you. I'll get you enrolled in that course. I've got some people that can give you a testimonial that they've taken our Easy Corporate curriculum for new businesses, and now they're rolling. They are rolling. And we help people. I know of a company that's down in Lower Alabama, in Dixon's Mills, Alabama. They just called me recently for something that they needed with one of their clients that they were working with. And we promised when we help to set you up that you can always call us. Well, they called me and they needed me to go to Limestone County to get something done for them. I did that for them because they started way back in 2005 with us. I showed them how to get incorporated, to get their company set up, and they're still working. There's some people right here in Huntsville that we help to get incorporated, to get their company set up, and they are very viable. You know them, you hear them all the time. They be willing to testify that we helped them to get started. I'm saying to you, if you are a business owner and you want to buy real estate, you either want to buy it in your company name or you want to know how to buy it yourself, and you're just not sure how to go about getting it done, we're here to help you with that. So if you want to buy it as an employee of the company, I'm going to put a copy of this recording out because we talked about that at the very beginning of the course, and I forgot to include YouTube and Facebook, so you guys didn't get that part. but we talked about how you can, if you want to purchase property as an employee of your corporation, how you can set up everything so that you are an employee, a viable employee with withholdings that they can verify. They can, because when you go to purchase property, they're verifying that the company that you say you work for is a viable company. Well, how do they do that? They check for the federal ID, and they check to see if there's a withholding account with that state. That's how they check. So you get all that set up. You make sure that you're paying yourself a viable salary, and all of that documentation is there, supporting documentation. We talked to you about that in the curriculum, about how to get that done. So when you go to apply as an employee of your corporation, you want 2 years personal tax returns, you want 2 months paycheck stubs, and you want your debt to income ratio not to exceed 40%. And in the book, if you go to, let's see what page that is on for debt to income ratio, it talks to you about how to calculate your debt to income ratio, how to figure that up. Okay, so yeah, pages 93 through 95 talk to you about how to calculate your debt to income ratio. And then 96 has an example on there of the formula of how to calculate it. So that's pages 95, 96, and 97 in this workbook that goes along with this course, that talks to you about how, oh, it's okay. It was right in front of me. I didn't have to look down at the book. Okay. But it talks about how to calculate the debt to income ratio. If you want to know a list of the non-qualifying lenders and what that means, you can go to pages 165 to 168 again in this manual. This is a workbook that accompanies this course. Homeownership pre-planning, and much, much more. It's a purchasing power tool for business owners and for ministries. They want to buy the real estate, but they don't know how to go about doing it. This is a manual that goes along with this course. So if you get the book without the course, you still understand it, because I got step-by-step formulas in there to tell you exactly how to do it. But it just doesn't mention all of the language that we go through in the course. We make sure that you understand how to do it. It's a hot button for me. I've seen too many ministries, too many businesses want to purchase and can't do it. There are two ways you can purchase it: as your corporation can buy it, and we show you how to set your corporation up so you can buy it. Doesn't take long. It's real easy. You could have everything done in a month, 2 months. You are prepared now to go in to these non-qualifying lenders and even to your local bank and be able to purchase or qualify for financing to purchase property. It's very easy to set it all up. This is for a business that you've been operating for a while. You just haven't incorporated. You haven't gotten some of the things done. You haven't galvanized everything that you have going for you, all the value that's in your company, to be able to present it to someone else. We show you how to do that. If you're a new business and you haven't been in business doing all of this, we still show you how to set it up. And in 2 months, you can have it set up so that you can operate henceforth and pre-plan to go forth and purchase real estate in a short period of time. Okay. Um, I think, let's see what else. Okay, we show you practical steps of how to hire yourself, how to be an employee of your own business if you want to do that. If you want to buy it again as you want the entity itself to purchase the property, we show you how to set all of that up and how the entity itself can qualify to purchase the property. When you get finished, you don't necessarily have to go to a non-qualifying lender. Now, non-qualifying lenders are not hard money lenders. Now, I don't have a problem, as I've mentioned before, with hard money lenders, because you can choose hard money lenders that don't charge exorbitant interest and they're not predatory. What they're looking at is your exit strategy. That's what they want to know. We're going to make you this loan. It's going to be for a short term. How are you going to pay us back? What's your exit strategy? We show you how to set that up as well. But non-qualifying mortgage lenders are not hard money lenders. They can make you a loan for 15, 20, 30 years. Yeah. Because see, they've got guidelines that are suitable for business owners. They're suitable for business owners or they've got non-traditional lending criteria that's set up for those who are business owners, set up for corporations to be able to purchase property without the predatory rates. We show you how to set up your payroll, how to set up consistent payments, how to set up your financial records, all of that for business owners. So you have to decide whether you want to be an employee of your corporation or if you want your corporation's purchasing power to be in the entity itself, so that the corporation itself, XYZ corporation, buys it in the company name, or if you want to be an employee of XYZ. All of these things we show you how to do. And this book is a workbook that helps you. So why is it important to establish a consistent income history? Well, see, the consistent income history demonstrates the financial stability and reliability that's crucial for mortgage qualification. Okay. So when we talk about required documentations for qualifying mortgages, what documentation is required for traditional qualifying mortgage approval? Well, you need your tax returns, you need your paycheck stubs, you need your debt to income ratio not to exceed 40%. But when you look at non-qualifying mortgages, now you can actually exceed a 40% debt to income ratio. And there are other things that they're looking for that traditional lenders would not be looking for. So you want to look into that. And those items are listed page 165 through 168 in this book, Homeownership, Pre-Planning, and much, much more. Purchasing Power for Business Owners. Let's see. I think we've gone through here. If you want a copy of this, I'd be more than happy to send it to you, because we're getting ready to get out of here now. I'm looking to see if there's something else in here that we haven't generally spoken of. So what I'm doing is giving you a general idea, okay? It's a general idea in this course of some of the things that you can do. If you want to become an employee of your own business, you want to set up your payroll, you want to establish your formal payroll system to ensure consistent salary payments. That's so that they can verify. So you've got 2 months paycheck stubs and they can verify a consistent history there that would match. And you're going to be depositing those into your personal account, paying yourself from your corporate account into your, and having a check, payable or direct deposit, into your personal account, so they can verify a paper trail of the payments that you're receiving on a consistent basis from your corporation. You want to maintain adequate financial records, detailed, and we can show you the software for that. All of it's really easy. It's very easy, and it's not nerve-wracking. And if somebody's walking you through it, it makes it even easier for you to be able to get it done. And qualifying as your corporation is easy as well. And we walk you through every single step. I am looking to see if anybody has a hand up before I get ready to. Okay. Yeah, that's right. That's correct. You can either purchase the property as your corporation, or you can show yourself as an employee of your corporation and set up everything. We walk you through. If you're not just saying you're an employee of the corporation, we set you up with all of your documentation, with all of your software, with everything that you need to actually pay yourself on a consistent basis with the withholdings. We show you how to set up your withholding account and all of that, so that you're consistently paying yourself, maybe on a monthly basis, on a bi-weekly basis, or whatever it is. It's directly going into your account, your personal account, and it can be verified through your bank statements. That's if you want to purchase it as an employee of your company. If you want your company to buy it, period, in the corporate name, then firstly, you have to make sure that you're incorporated. And remember, we teach a course, Easy Corporate Curriculum for New Business Owners. It shows you how to set up your corporation, how to do all of that, so that you are now viable. You have pre-planned and you are now viable as a corporation to purchase big ticket items, specifically real estate. Because once you've purchased real estate, you can pretty much buy anything else in your corporate name. And so we show you how to qualify for that. And we give you a list of non-qualifying mortgage lenders that can be more than willing to finance you. Yeah, that's right. Any other questions before we close out? I appreciate y'all's participation. I apologize again to the people on Facebook and YouTube. I was really focused on the people who were here with me inside of the Zoom, and I just got so involved in going through with some of the things that we had set up here to talk about today in the course, and I missed bringing you guys in. So I apologize for that. Can you provide examples of business owners who successfully qualified for mortgage by hiring themselves? Yes, 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 I can. And I will. I don't want to mention their name over, you know, our companies. We've got Public Research Inc. We've got Public Records Research Inc. We've got several other companies that I won't call, but we do have several different corporations that we've bought property. Lincoln Retrieval Services Inc. Several different companies that we have a vested interest in that we have used to purchase real estate. Yes, absolutely. So yes, and um, if we let's see. Let me go through here. Look, I'm just making sure that we are covering everything. So you guys understand the consistency, the importance of consistent income history. This is why we're setting it up. So either in your corporation, you have consistent income history, and we can show that through your financial statements and through your AR, that's your accounts receivables. That the whole purpose of that is to show consistent income history. And then of course your bank statements, but most of the time, that'll be the last thing that they ask for. If you're doing it in terms of the corporate name, the corporation's name. They're looking for your AR and your financial statements. So it's key that you know how to, yeah, you can hire somebody to do your financial statements. But I've seen in so many cases that people have hired folks to do their financial statements, and they're charging them an arm and a leg. You can set up your own financial statement and then pass it on to the CPA, and the CPA can get your books, your general ledger, and all of that, and verify what you have stated in your financial statement. It's a whole lot quicker. And it's a whole lot simpler, and it costs less because you've already prepared the financial statement. Now they're verifying. Now, if there's something that's inconsistent with the actual records versus your financial statement, then they'll have to put that in their report, in their audited financial statement. But if you just prepare your own financial statement and you provide that to your, well, actually, you can get the records that you get from your bookkeeper, or you can use your own accounting software to prepare your own books. See, all of this is stuff that you can do that will save you in your business. But there are a lot of people who are paying a whole lot of money when you could prepare the information and then take it to that person that's licensed. Or if they're not licensed, but they are qualified, they do have the all of the qualifications. You can take it to that bookkeeper. You could take it to their accountant after you have prepared it. I have helped several different companies who ended up losing some money. This is not to talk about the credibility of any accountants. I don't know what happened with the money. I just know that they were not aware of their own finances, their own books, their own financial records. So they just yielded it to someone else, and they never looked back at it, which cost them quite a bit of money. I'm teaching you to know how, not just to read it, but to prepare it, to know every part of your financial statements, to know every part of your AR, to prepare it, to set it up. So when you walk into the bank, you're not saying, I need to call my accountant. No, you know what it is. You understand it. And you're the one sitting there talking to the lender or the banker. So I'm hoping that this helps you guys. I'm going to go ahead and end now because there have been some folks who've been sitting in here since 4:30. Um, okay. 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 Yeah, you can reach out to me like that. DM me, and I will set you up with some of the companies that we have actually set up, real life companies who have purchased real estate with their corporation or as an employee of their corporation, and they'll get a chance to give you some testimonials of how we helped to set them up. Yeah. I've been more than happy to do that. I don't want to do it over the air because I haven't gotten authorization from those people to do that, to use their name like that. But I do know that I have authorization to send them individuals that I preempt them about, to let them know that these people are going to be reaching out to them, and they will talk to you. And because when I'm broadcasting their information this way, we don't know who is going to be getting it versus you just reaching out to them individually, and they can talk to you about how they help to set things up. Okay. All right. Okay. Is everybody seeing this, um, the curriculum for this week's course before I shut it down? See if there's anything in there that you need to. Okay, remember the non-qualifying mortgage lenders. You can find them in this book, Homeownership, Pre-Planning, and much, much more. Purchasing Power for Business Owners and Ministries. You can find that on pages 165 through 168. Those are non-qualifying mortgages. All right. Documentation, well, the debt to income ratio and how it's calculated, pages 95 through 97 in this workbook. Homeownership pre-planning and much, much more. Okay. And remember, this is for businesses and for ministries, because what I'm finding is that ministries, not the big ones, but the smaller ones, the mid, moderate to smaller ministries, they're I hear them all the time. They want to purchase real. They're leasing these 18,000 square foot buildings, and I'm not exaggerating, when they could be purchasing, but they don't know how to do it. I can walk you through step by step how to get it done. Now, this course, Homeownership Pre-Planning and much, much more, Graduate to Land Ownership, is free. But the corporate comprehensive curriculum for new business owners, there is a fee for that, but it's very nominal. And when you come out of that class, you come out with your we walk you all the way through completing your documentation, taking it to the records room and filing it, and also filing it with the Secretary of State in your state of choice where you choose to incorporate. When you walk away from that class, you are incorporated. Yes, it's well worth it. If you look at pages 165 to 168, again, that's a list of the non-qualifying mortgage companies. If you want to take a look at the financial statement portion, that's page 103 to page 161. It's a detailed explanation of how you go about preparing financial statements step by step for your corporation. That's if you want to apply to purchase real estate as a corporation. If you want to apply to purchase real estate as an employee, we also have that information in here, and we have it in this book as well as to how you qualify. I've enjoyed you guys, and I thank you so much for this opportunity. I want to thank you for attending the class, for staying in here with me, even though we took that long. I want to thank the people who are in Facebook world and are in the YouTube world. Thank you so much. If you need anything, I'm here for you. DM me. Remember the class for the easy corporate comprehensive curriculum for new business owners. That's a class that requires a fee, but when you finish the class, you are completely incorporated. Your documentation is recorded. You have your corporate kit, and you are a viable entity ready to go forth and pre-plan for purchasing your real estate. Guys, thank you so much. And I want you to remember, I'm Jacqueline Battle. I'm with National Land Realty. And today, this very second, is the most advantageous time to purchase real estate. Do it today.